Welcome to Behind the Curtain Finance. My name is Thomas Manetta. This is a show that hopes to reveal different sides of this industry that I am in, the financial services industry, for investors and advisors, and hopes to show them different things that they may not have had exposure to or be aware of. And this week, we're going to talk about something that has sent shockwaves through the financial services industry, and we're very fortunate to have someone that had, I guess you could say, ringside seats to the rollout. Alex Chalekian is the founder and CEO of Lake Avenue Financial, a Pasadena-based advisory firm. And I had the pleasure of meeting Alex and his lovely wife, Rosa, last year at an Altruist summit. And they could not have been more generous with their time, and it was a real honor to meet them both. Alex, welcome to the podcast. Thank you for taking the time.
Thanks for inviting me, Thomas. And it was our pleasure. We loved meeting you.
Awesome. You know, this conversation that we're going to have is in many ways a continuation of a conversation that I had with your good friend, Jason Wenk, the CEO and founder of Altruist, the custodial platform that I've been using for just over 2 years. And we spent about a half an hour, 45 minutes just geeking out about vertical API and model context protocol. And true to his word, back then he said within the next 18 to 24 months, the entire landscape of the financial services industry is going to change. And, you know, and presumably most of that change would be coming from within the Altruist platform. And sure enough, 2 weeks ago, or I think it was 2 weeks ago, the rollout of the tax planning software that's linked to Hazel, the Hazel tax planning software within Altruist, was an event that sent markets reeling. And you know, I'm curious because I think you have a unique perspective on it. What was that experience like for you? And secondarily, what did you think of the market reaction to it?
Yeah, great questions. Before I jump into that, I listened to your interview with Jason. Great job, by the way. I really enjoyed that. And one of the things that hopefully you've seen and experienced with Jason Wenk is when he kind of sets these timelines, he sticks to them. He's always been able to deliver. And when I met him years ago, he kind of laid out the foundation of what Altruist would be, and he's been hitting it, time after time. As some of you guys might know, Jason and I were actually on vacation when this announcement came out.
Yeah.
So we definitely did have a little bit more of a unique perspective on what was going on. We were, I think we had just had breakfast with the family, and we were out on the beach, and then Jason took his son to the pool. And then I went to check up on him, and he had disappeared. And when I talked to his wife, she told me that his phone has not stopped, going crazy.
Right.
His PR team and marketing team were reaching out to him. Obviously, CNBC and Bloomberg and others were all trying to get interviews, and he was kind of scrambling to figure things out.
Yeah, so much for the vacation.
Right. We showed up with T-shirts and flip-flops, so I don't think he was necessarily ready to go prime time on TV. And when we were out where we were at was a little bit more remote, so we didn't have necessarily the best Wi-Fi connection. So I think he had Mozzie jump on one of the interviews, which obviously Mozzie's amazing. So he did a great job. But that was my experience. And I think some of the people have talked to Jason, and I don't want to speak on his behalf, but people have asked me like, "Hey, were you shocked by the reaction in the markets?" And kind of yes and no. Partly, I was shocked by how quickly things started to kind of drop in the marketplace. But for me, I was not shocked because I've been working with this tool and utilizing it, kind of beta testing it. Even I beta tested Altruist even back in the day. And for me, it was something that I experienced, I thought would happen, maybe not all at once, right? But so it wasn't a shock to me. I was like, okay, this is going to change the paradigm in our industry. And I guess I didn't really think much of it when I got the announcement because I already been using the tool. So so you're kind of numb to it. And I think that's, again, I think kind of Jason probably was in the same manner. He's been utilizing the tool. He's behind the scenes. So for him, this isn't something new being rolled out. He's probably been messing around with it for months, you know?
Right. I mean, that's given the conversation that I had with him, it probably didn't get that much exposure. But for me, I not only knew that it was coming, but I knew what, what the future holds as well. And so I think, I was, the sell-off to the degree to which it had, that it got to was kind of surprising, but not so much. But if that's the way the market's going to react to just tax planning, imagine what happens when, they roll out things like, the paraplanner, and they roll out, all the other agentic tools. And so,
Right.
What I'd like to do is kind of like paint a picture of the way I see it. And I don't want you to feel like you have to divulge any secrets, but I just want to talk about, given the rollout of tax planning and how I see the next 18 to 24 months looking, maybe even the next 18 months. I think that's more accurate, because I think that the landscape is going to change dramatically, and it's going to be for the best. And that's the most exciting part about it. And I think that what's going to happen next is you're going to have things like estate planning. You're going to have things like financial planning. You're going to have things like a paraplanner, and a number of other tools that will be internal to Altruist. And all of those different tools will talk to each other, and they'll have all of that data cross-pollinating between the silos that are for an advisor right now completely separate. So you have to go to Holisticplan, or you formerly did, and you have to go to Right Capital, and you have to go to all these different places, and it's time consuming to do that. But in the future, in the next 18 months, it may be possible that when you meet with a prospect, you'll have that entire interaction recorded. And then within minutes, you'll have a tax summary, you'll have an estate planning summary, you'll have a one-page financial plan summary. And that will be you can deliver that branded to your client immediately. And that is
Absolutely.
really powerful, because not only are you recording all of that and building this rich database of this client data, and that only, increases every time you meet with them, but you are offering value immediately, and you can focus on the human side of the business, which I think in the end is going to be the only thing that you can justify charging a fee for. And so you can move a lot faster. You can have more richer conversations that aren't centered around data gathering and pulling in all these different statements and everything. And it's done seamlessly. And that will allow you to build a much more vibrant practice and potentially a much bigger practice by yourself. And, you can do that without hiring people. Am I far off?
No. I think we could just end the show right here. You nailed it, Thomas. So yeah. I think the important part is that the relationship that you have with the client is the ultimate important component of this, right? Mm-hmm. What's happening behind the scenes, most of the clients don't care whether you are using software A or software B. They have no idea. They don't really know. Those are the tools that you're utilizing. Just like I wouldn't know if I walked into my doctor's office what CRM software they're using, or what they use to have the diagnosis come in, and what they use for other things, and the tools for the x-rays. I don't know. It doesn't really matter to me. At the end of the day, I want to know, am I going to be okay? What do I need to do? Is there some different recommendations that they're going to have based on my diagnosis, and so forth, right? Mm-hmm. We have to look at it from that standpoint. But there's going to be a big paradigm shift in what's happening right now with time, as you pointed out, right? So I'm going to have a little bit more efficiency where I can focus on the relationship. And if we have some time, I'd love to take a step back and kind of talk about the history, because some people don't realize I've been in the industry for a long time. I started in 97. Mm-hmm. So I've seen a big change and shift in things. At one point when I was early on in my career, we were utilizing captive software, right? So I was at American Express Financial Advisors, which became Ameriprise, and they have proprietary software. And when you're there, you don't get a choice what financial planning software you want to use, what risk tool analysis you want to use, what CRM you want to use. None of that stuff. It's all piped in. You don't have a choice. So I think the grass is always greener, right? You look at that and you're like, oh, I can't wait to go independent and cobble together my own best of breed software. And that's what happened. I left Ameriprise or American Express. We went to LPL Financial on the independent side, and they gave us a more select menu to choose from, but there was a menu that I could choose from. So I started to cobble together our own software. And that's what I liked. And I was always kind of in my mind thinking it's not right to have all of these things be in one software. You want best of breed and just kind of put it together. Now, when we got to fast forward and you see integration in the future, again, I think this was a marketing tactic for most of these software companies, because integration was like, well, we can push data, 3 fields over from one software to the other, the client's name, email address, and address, or whatever, phone number. That was really not much of an integration. So as time has gone on, and this is where AI comes into play and the agents come into play, I've realized that it would be much better to have one place to have things. Again, you better choose you better choose the right partner in that regards. But if we have something like Altruist and Hazel and they're building all the software and the tools inside, and it's cohesive and it's integrated and it's giving the result that the client needs, ultimately, that's the most important part. Being able to do that instead of me cobbling all these things together, having my team making sure that the information is correct, and moving it from software A to software B.
Right. I think I could take it one step further, and I would say that I've had a similar experience. I've been around this business since I was a kid. My dad was a stockbroker in the 70s, so I know the history of the business and how it's evolved. And so when you think about running your practice and having these AI tools and having them, I say speak to each other, and I think that I'm thinking about it the right way. And you're able to deliver something to a client that you could never have dreamed of doing in such a short amount of time, and and it being a wonderful client deliverable, then being that choice of custodian is so important, because if they can't do that, if you're still stuck somewhere else, then you're really doing a disservice to yourself and to the end client, because you have this other option. And if you're not taking it, then you're not running an efficient business, and you're not running a business that's really good for your end client.
Right.
Which is amazing to think about. But I think that kind of implication is coming, and it kind of forces your hand almost, right?
It does. And listen, the client experience is very important, because ultimately, if you can't, as an advisor, deliver this, the client's going to try to possibly find it somewhere else.
Right.
And it might not be that they're looking for it. It might find them, what that people are marketed to on a daily basis when they go on Instagram or whatever it may be. Or they might be talking to their friends, and their friends are boasting about, oh, I love working with Thomas. He's made my life so much easier, right? And as opposed to that client, the other prospect or client is thinking, hold on, why doesn't my advisor do those things? It's so painful. I feel like I'm going in for a root canal every time we're going to do an annual meeting.
Right.
So all of those components are very important. And it's very hard when you're in the business like you and I are sometimes to take a step back. But if I told you right now, Thomas, okay, you gotta, we want to go to this restaurant. You gotta call and make a reservation. You might be like, I have to call and make a reservation. Like, can I just go on Resi or one of these apps and just real quickly book a table? Like, we're already gone so far behind that it would be going backwards. Or if I told you, can you fax this over to me? You'd be like, fax? What are you talking about? But that's kind of how I feel like the industry will be changing, in a way that some of these advisors, many advisors that are not going to want to adapt to this, are going to really kind of get left behind. And we'll see how that works.
So that's really interesting. So you're a student of the business, and so am I. And I marvel at the fact that wirehouses still cling to as much of the business as they do. And I think, I mean, I think that it's gonna happen slowly and then kind of all at once,
Mm-hmm.
because a lot of these, older kind of brokers have different kind of things that are holding them back. They've taken subordinated notes, and they're kind of, they're just,
You're right.
they can't leave, and there's there's so many other reasons why they stay. But I think that in this age where, all the information is out there, and you really can't hide from like the best service, because it's going to be, you're going to find it, or it's going to find you, as you mentioned, that eventually, they're going to have to adapt, or else, because it's just not, it's not like, it's not like before, where, they lived within this information asymmetry, and they had all the information, and the
Right.
client didn't. Now everything's available, and it's either adapt or die, right? I think.
Absolutely. And look, the industry's been through a lot. You and I are, as you mentioned, students of the industry. You had a better experience because your dad was in the business, so you kind of got to see it firsthand. But when I started, even before I started in 94, after I graduated high school, I started working at a bank. And I remember there was a financial advisor inside the bank, and we were looking at buying some mutual funds. I wanted to invest. I was a kid.
Yeah.
And we bought the Putnam Voyager Fund, and we looked at Oppenheimer and
Oh, wow.
Franklin Templeton. And you know what? Paying 5.75% upfront commission
Wow.
on an A share was not a problem. It was normal, right?
Mm-hmm. Yep.
Fast forward, that changed, and then people said, okay, we cannot have this. Index funds started to come out, the Vanguards of the world and so forth, or no load funds started to come out. So there's, oh my God, the business is over. Well, what did they do? The funds adapted. They came up with B shares, C shares, and so forth, right?
Right.
And then we fast forward, and then when I started in the business in 97, people were still doing some trading. Then we had the online trading companies that came out, Ameritrade and E-Trade, and all
Schwab.
those things start to
Yeah.
come out.
Yeah.
Yeah, and there's like $7 a trade. That's it. Your business is over as a broker. What did they do? They switched from commissions to fee-based.
Yep.
So the industry had to shift all of a sudden. Now there was those that kind of held on to their clients, and slowly but surely they realized it's better to kind of annuitize that business and not be transactional. Right. And then we fast forward from there with robo trades coming, robo advisors coming. That was going to be the big boogeyman. Right. And then what happened there? You start to see people kind of compress their fees in the industry, as well as have to offer more things, focus more on financial planning, just not asset management. So as you mentioned, now we're doing estate planning, we're doing tax planning, we're offering a bunch of other things, and have it all as a fee-based package for the clients, or we're charging a financial planning fee. And you're seeing more people that come into the industry go the route of getting their CFP and maybe down the RIA route.
Yeah.
So the next iteration will be with AI and the agents, and see how that comes about with the industry. But this one is a little bit different. This isn't well, we can switch into something else. I think it's going to be so quick and so fast that, as you mentioned, some of these advisors will have to adapt or die.
Right.
And there is a lot of advisors. Let's just be quite honest. The average age is up there when we talk about advisors, and many of them probably were going to retire 5 or 10 years ago. And I know this because I've acquired a number of practices in the past, and the money's just too good.
Yeah.
And it just doesn't make sense. But if we have something like this that's going to be super disruptive, either they're going to get forced to retire or sell their practice, or they're just going to slowly have clients that that leave.
Yeah.
But
I was going to
that's
say
kind
that
of
one
what
of the
my thoughts are.
I would say that a story that's, I think, is kind of analogous to what's happening now, although it took longer, is the what they call May Day 1975, when they floated commission rates for the first time. And
Mm-hmm.
there were firms that were so arrogant, they actually raised their prices. But that was the opportunity for Schwab to enter into the discount brokerage world. And I remember my father and all of his, you know, all of his buddies, they would deride him. They would dismiss him. They would say, no, that's never going to work. There's no way that's going to happen. There's no future there. And then the internet happened. Right. And then that changed everything for Schwab, because then day trading blew up and Schwab blew up and they became all the things that they are today. I think that AI is going to be that game changer. It's going to be the game changer and it's going to happen in a much shorter amount of time.
I mean, if 20 years ago I had told you were going to get in some stranger's car, that you were going to hail from some little phone and they were going to take you places, you'd be like, what are you talking about? Like, it just wouldn't make sense. We can't even comprehend that. Right. So I don't know what will come about with the agents that are coming forward, not only just in finance, but in other industries. But it's going to be revolutionary, and you need to be able to make sure you could build that into your existing practice, not just for survival purposes, but just to give your clients the best experience, to make sure that they're getting the right information very quickly. And this has also helped my firm as well, whether it be cutting costs or not having to focus on raising costs to our clients, because we can keep things lower and we don't have to keep hiring as we have more and more clients. I'm not too familiar with your practice, Thomas, but if you're focusing on ultra high net worth clients, for example, they have a very complicated situation. You might not have to work with hundreds of clients, but we work with hundreds of clients, and I've always tried to focus on helping kind of the millionaire next door. Sure. I don't really have minimums in our firm. So having something like this makes it much more easily scalable, and we can provide similar services across the board and not have to be like, oh gosh, I got to do this financial plan. Sure. This thing is going to take me 8 hours. Right. How am I going to deliver the same level of service to every client that we have?
Right. I just want to, I want to keep it on the time that I promised, but I wanted to talk about the opportunity for young people that are thinking about getting into the business. And I want to get your thoughts on it, because I don't think there's ever been a better time for a younger person to get into this business. You don't have to suffer through all the training programs and all the difficulties to launch a business, because there were only so many ways to get into it. But now you can open up your own RAA, for a fraction of the cost that it used to be 10 years ago. And you can build content and you can share that experience, and you can, and you have all of these tools that you don't have to pay for anymore. And so you can enter into a business where you're helping people without hurting them, which is something that I try to say all the time. And which means you don't have to sell them products that they don't need, and you don't have to put them into things that have 5.5% upfront fees, and you can really build a wonderful kind of, business for yourself. And so I think that is something good that's coming out of AI. I think that's great for the younger generation to get into this business.
Right. A lot of technology has kind of leveled the playing field, right? Back in the day, you wouldn't be able to have your own little show. But now with YouTube and so forth, you don't need a network. You don't need to be a star. You don't need to have agents and blah, blah, blah. You're like, I could just launch my own channel tomorrow. And if people like my content, it's going to take off, right? Same thing with social media and so forth. I'm a little, I don't want to say I'm on the fence when it comes to younger people coming into the industry. Obviously, right now, I think we have a very limited time frame of, if you do come into the industry, like, you really better hit it off with a bang, because things, if they change rapidly, you might say, I came into this business and it's evolved so quickly over the next 18 months, 2 years. But that being said, I think there's a huge opportunity for younger advisors, or those that are wanting to come in, to talk to some of the older advisors that are maybe not willing to learn about the new tools and the technology, and be a huge asset to them and a resource, and say, listen, you don't need to learn this stuff. You don't need to understand this stuff. I will do that. I will be the person that does it, and I can help you set up for the next generation and be your G2 advisor. So when the time comes and you want to step away, I can take over those things. Because as you mentioned, even with Altruist probably coming out with like a paraplanner feature, do you need a paraplanner? That's usually the starting role that comes into the industry. So if that role is getting replaced, that's why I'm a little worried about those that are kind of coming into it. But if they can find the advisors that maybe are not ready or comfortable using these tools, and they can say, you don't have to worry about it. I'll help. I'll deal with all of that, and I'll learn, and I'll show how we can better our practice.
Yeah, that's a good point. I think you're absolutely right. But I think I just have scar tissue from when I was younger, and I see the opportunity to get into the business in a different way. You're right. It just takes some ambition to see it creatively and find the people that are, that you can service and maybe lighten their load, and then in the end it pays off for you. Yeah.
Yeah, I don't want to discourage people. Don't get me wrong, but I always want to be honest with them and just say, this is not an easy business. It's easier to get in now, but it's not necessarily always easier to thrive. And a lot of times when I talk to younger advisors, they'll say, I launched my practice, and you see this with, I'm not trying to pick on XYPN or anything, but people will start their own RIA and so forth. And then you see what the turnover is there. Possibly it's not very low. They don't know. I think it's good to kind of cut your teeth and work with someone else, and learn the ropes and be an asset to them and provide different resources and tools that they would have never been able to do on their own.
Let me ask you one last question, and then we'll wrap it up. There's been this discussion around possibly a solo advisor being able to ramp up to numbers that are unheard of, $1 billion, right? So if that's true, and if you're reaching that kind of scale and you really want to extend beyond that, let's say like right now you can only get to like 250 or 300 by yourself without hiring somebody, and you're really going to work hard, right? But if you get to $1 billion and you still start to feel that pressure again, right? I mean, wouldn't that create an opportunity to, launch kind of like an apprentice program where you're hiring junior advisors and then you're rolling them out, maybe as owners in 5 years, like that hedge fund, the Tiger Cubs or whatever they call it. But like you're branding owners, and you're creating ownership in the financial services industry. I don't know if that's going to happen, but I'm curious to hear your thoughts on it.
I think it's a big possibility. And when we talk about these solo practices that could hit $1 billion, it doesn't necessarily mean that it's just a one-person shop. They might still have staff. Maybe they don't have other advisors. Yeah. So ultimately, again, you can hit $1 billion by having 10 clients with $100 million, or you might have thousands of clients doing that. So it all depends. But I think it's very possible. The way to be able to scale and to be able to be efficient, you're still going to need some team and staff, because you can't just be on Zoom calls from 9 till 5 every day. Right. You'll burn out. But as you mentioned, I think it's very helpful, and it will be a possibility for you to bring on the next generation, kind of get them to go in there. I've struggled with managing people, and I think that's a big problem for advisors. A lot of them like to go into this because they say, I don't want to worry about a team. I don't want to worry about this stuff. And then now you kind of get thrown into, well, I got to now manage a whole team because we're growing. So there's kind of that catch-22. And then when you're that busy, it's a lot harder to train them. So if I don't know if Jason's listening, but maybe one of the agents can be a training agent to help train the next generation of advisors.
I wouldn't be surprised if he's already thought of that, right?
Yeah, I'm sure he has.
Listen, thank you so much for taking the time. I think we covered a lot, and I appreciate it. And I think I'll see you in a couple of weeks.
I hope so.
I'm coming down to that conference, so I look forward to seeing you.
Awesome.
Thanks,
Perfect.
Alex.
Thank you for your time. Thank you, Thomas.
Thank you for listening to Behind the Curtain Finance. Click the follow button to be notified when new episodes become available. Visit our website at www.manettawealth.com or give us a call at 415-640-2121. The information covered and posted represents the views and opinions of the guest and does not necessarily represent the views or opinions of Manetta Wealth. The content has been made available for informational and educational purposes only. The content is not intended to be a substitute for professional investing advice. Always seek the advice of your financial advisor or other qualified financial service provider with any questions you may have regarding your investment planning. Copyright 2025. This content, which contains security-related opinions and/or information, is provided for informational purposes only and should not be relied upon in any manner as professional advice or as an endorsement of any practices, products, or services. There can be no guarantees or assurances that the views expressed here will be applicable for any particular facts or circumstances and should not be relied upon in any manner. You should consult your own advisors as to legal, business, tax, and other related matters concerning any investment. The commentary in this post, including any related blog, podcasts, videos, and social media, reflects the personal opinions, viewpoints, and analyses of the Manetta Wealth Management employees providing such comments and should not be regarded as the views of Manetta Wealth Management LLC or its respective affiliates, or as a description of advisory services provided by Manetta Wealth Management or performance returns of any Manetta Wealth Management investments client. References to any securities or digital assets or performance data are for illustrative purposes only and do not constitute an investment recommendation or offer to provide investment advisory services. Charts and graphs provided within are for informational purposes solely and should not be relied upon when making any investment decision. Past performance is not indicative of future results. The content speaks only as of the date indicated. Any projections, estimates, forecasts, targets, prospects, and/or opinions expressed in these materials are subject to change without notice and may differ or be contrary to opinions expressed by others.